You are doing SIP every month 15,000. When market fell, your NAV would drop. Start liquidating there and buy equity related schemes. So you are getting more units at less price. For going to mutual fund, SIP, lump sum and stock investing, those things. There is very basic things you should be having. Term insurance, life insurance, health insurance and some part of emergency funds. How you should be seeing your investments means it should be seen in a portfolio level, not as an individual level. Should be having FD also, you should be having RD also, you should be having gold also, you should be having exposure for stocks also, mutual funds also. So combining all these things, you would be having a diversified portfolio. So over a period of time, what would have been happened means before investing, we would have decided for you 60% equity and 40% debt. But over a period of time in your portfolio, there will be 50% debt and 50% equity. So at that time, we should reduce that 50% of debt to equity. This terminology, we call it as rebalancing.
I want to know the difference between SIP and lump sum. Is SIP good or lump sum?
See, SIP is like you would be investing every month some certain amount of money. Lump sum means at a time you would be investing. Everything is good, everything has its own advantages and disadvantages. When we combine the both elements, we would be getting some greater results.
Hi, I'm Harshita. I am a part of marketing team of Rupeezy. Today we have Srisha, a certified mutual fund distributor and also has Fin Aspiration company. He's an entrepreneur and today he will help me in growing up my financial journey where I'm yet to start my investment.
Hi everyone, I am Srisha, founder of Fin Aspiration. I am a certified mutual fund distributor. I'm paneled with Rupeezy for my mutual fund distribution business. Today we have Harshita from Rupeezy marketing department. I would be guiding her for her investments journey through mutual funds. Can we start, Harshita? Yeah. So before going to actual numbers, I wanted to just know very basic things about you. Something like what's your current salary, what's your ambition, what's your goals, very basic things. And how did you develop the interest to do mutual fund SIP? And who thought? And what's just a few, if possible, few basic things about your schooling and your upbringing of your parents. Yeah.
Sure. So as I told you, I'm Harshita. I recently started my career. I am experienced between 2 to 3 years. Yeah. So I started my journey from a consulting industry and shifted into a fintech industry. Okay. Coming to my upbringing, I did my schooling in Bangalore, education, everything in Bangalore. My finance journey started in MBA. So we had a particular project where we are supposed to find certain information of particular funds, and my professor also gave me certain number of funds where I have to check their stock rates, NSE, BXC, MCX rates. That's how my finance journey started. Then I went to multiple websites. The most used website is Money Control.
Money Control.
And I was not understanding what exactly the numbers are, what are those. And I started doing research. Then when I entered into Rupeezy, that gave me a broader perspective of investment. There are stocks, there are mutual funds and other things. I didn't start my investments. I started learning. I started get to know how the investment is, how market works. I'm in the budding stage of that. I can't disclose my salary, so I would give you a particular budget, which is between 50,000. And coming to the expenses, the travel, I could nearly save around 15,000 per month.
Okay.
So as a beginner, what would your suggestion if I start doing my investment in mutual funds? Should I start from SIP or lump sum? How SIP works, how lump sum works?
Definitely, I would be sharing those insights with you. But before that, like before going to mutual fund, SIP, lump sum and stock investing, those things, there is very basic things you should be having. You should be having term insurance and life insurance and health insurance and some part of emergency funds. So what's emergency fund means? Your yearly expense, what is there, right? That yearly expense of 4 years should be in your emergency fund.
Okay.
Like these are the very basic things. before starting an investment?
Let me divide my salary so that you will get a rough
Since you
idea.
said I can't disclose your salary without disclosing your salary, it's like going to doctor without disclosing
I will
your.
give you a fair idea by dividing
sure.
to percentage.
Sure.
Suppose I will have the expense of 20% of my salary. That could be travel, food, my daily expenses, everything.
Okay.
And 20% I would give it to my parents. 10% is what I save.
Okay.
So how should I use this 10% to my future growth?
Okay. Like the component which you are giving for your parents, right? For 2 months, don't give your parents. Ask them. I would be buying term insurance and health insurance. Post that you could give your parents. So that's not the problem. In remaining, what you said, 20%, 20%, 10%. In that, like what I would generally say is I would be recommending my clients is whatever they are earning, out of that earning, 30% should be going for their investments.
Okay. If it in terms of mutual funds and the savings, I preferably do a FD than mutual funds. How FD would safeguard? I know the percentage is very less in FD.
Yeah.
And that is a fixed amount that would be kept there, and after one certain lock-in period, you will receive it.
Yeah.
So that is safe. But in mutual funds, it doesn't work like that.
Yeah.
Your money would increase or it would decrease. With what guarantee or with what sense why I should invest in mutual fund than FD?
Like what's the inflation?
Inflation
Rate.
So
What is what you would be seeing in newspaper or in newses or Instagram reels? What's the number?
7%.
What's in real terms? In real life, what are you experiencing in day-to-day life?
9%.
No, it would be more than 12%.
Okay.
So to beat the inflation, like keeping money in FD doesn't make sense. I'm not saying like entire your money saving should not be invested in FD. I'm not discouraging you should not be doing keeping money in FD. So it should be a part in FD. Let's forget all your bifurcation. Let's say you have 10,000 rupees left for your investments. So in that 10,000, you should plan in such a way that 2,000 should go for FD or RD, or 8,000 should go for mutual fund SIP. By combining these two things, you could get a secure return also, safety also, and more returns also. So ultimately, you would be beating inflation and you would be achieving your financial freedom also.
Is investment really important in this particular generation, or early investment helps for us in a better future?
Like to answer this question, it's like asking should I be healthy or not? Like how regularly if you do exercises and you would be healthy, right? Similarly, you should be doing investments also. It's not like it's not an option. It's just this compulsory obligation where you should be doing investments. It's not an option like whether I should be or not. Because since how we are habituated from our parents, from like our childhood upbringing is, like they would be giving us some amount of pocket money. We used to save and we used to take it for expense to buy some chocolates, those things. We never thought of investing in those days. So now we would feel complicated, like, hooray, that was easy saving. Why should I put money and get compounding those things? I would save and I would buy the things. Saving in safer instrument, as you said, saving in FD. But we are in an economy. Economy works in different ways. So usually how economy is designed is across the world based on capitalism theory.
Okay, what is that?
So capitalism theory means like money would be keep on printed. So people who would save the money, their money value would get decreased. So that's a one-line answer for what's capitalism.
Okay. Coming to that, my parents think instead of keeping in FD, you can purchase a gold. Currently, the gold rate is higher and it keeps on increasing it. How is gold investment better or doing a mutual fund investment better?
See, it's not which is better or not. You should be having all the combination. it's like how you should be seeing your investments means it should be seen in a portfolio level, not as a individual level. Should be having FD also, you should be having RD also, you should be having gold also, you should be having exposure for stocks also, mutual funds also. So combining all these things, you would be having a diversified portfolio. Whatever the economy risk happens also, your portfolio won't go, drawdown would be very less, and you would be getting the returns what you are expecting.
How to enter into mutual fund? Since I have zero knowledge about mutual fund,
Yeah.
I want to invest. Now I have made up my mind, I want to invest.
Yeah.
How to start and enter into mutual funds?
Yeah.
Like, which are there are so many funds. There are liquid, equity,
Yeah.
debt, hybrid,
Yeah.
and there are mid, small, and large cap funds.
Yeah.
To start a mutual fund, what is the best way and how to start it?
So before starting the mutual funds, what I want to know is what are your goals?
Coming to my goals, I would at a retirement age, I want to I should have certain money,
Okay.
and I look for a better life.
Okay. So financial independence you are
Yeah.
expecting.
Yes.
So for that goal, for your risk appetite, like since you are 24 years of age, right? Like how your portfolio should be means now at this point of time, your exposure for equity linked mutual fund scheme should be higher, and there should be a part of debt instrument also in your mutual fund portfolio.
What is equity?
Equity thing means the money what you would be giving for fund manager, right? Those money the fund manager would be investing in certain stocks listed in Bombay Stock Exchange and National Stock Exchange. So based on the returns, based on the stock performance, your mutual fund returns would go up. You might have heard the name of NAV, net asset value. That is the thing where you would be getting to know about your mutual fund returns, how well your fund has been performed from from the day of investment, how it has been grown. So that's the parameter. So if stock price increases, the fund managers which they have invested behalf of you, your NAV would also increase.
Okay.
So that's the broad concept of how mutual funds works. So there would be a fund manager, you would be paying certain money every month, let's say some 10,000 rupees. That fund cumulated, like you, there for him there would be thousands of investors. Collecting, pooling money from all of them, he would be planning, he would be having some sophisticated financial models. Based on models, he would be investing your money in stocks.
Can you help me with the roadmap of 10,000 investment that I do with the SIP? Okay.
Like before going to SIP thing, like I want to just brief about the concept. What's the strategy we give to our clients. So before that, I want to introduce, explain you few things. The stock market is there, right? It's very volatile. You can't just keep your entire money there itself, keep on doing in just equities based scheme. So you should be having your portfolio in a such a way, your portfolio exposure should be in a such a way that where all the asset classes, something like your gold, something like your debt instrument and equity should be covered in your portfolio. So by covering all these three things, we should plan your investment strategy. So coming to the strategy part, there is 2 to 3 things which I will be discussing with you. First thing is core and satellite portfolio.
Okay.
So what is core and satellite portfolio means? Core portfolio, let me take some school example. I think in school there was 6 subjects for you. Like out of that 6 subject, I think even you are also like me, average student, not a topper, I would be assuming. So out of that 6 subject, 3 subject you would be liking very much. In 3 subject, you getting more than 90% marks is fixed. Remaining 3 subject depends on the environment. If you get some important question, or if you if you get chance to cheat in exam, then remaining 3 marks would get increased. So what I am trying to say is, in your mutual fund, constructing mutual fund portfolio also, there is a core portfolio. In core portfolio, where the things are fixed, like you getting returns is absolute. So you should be sticking on to that.
Okay.
And satellite portfolio is dynamic. Based on market environment, we would be changing the funds. Let's say, for example, in your core portfolio, SIP portfolio, 3-4 funds should be definitely there. So one is multi-asset fund and aggressive hybrid fund and mid-cap fund and large cap fund and balance advantage fund if necessary. So these are five schemes funds which I have said, right? This is should be compulsory in your portfolio. It's a part of core portfolio. Let's say now tomorrow market valuation has peaked, so you have certain money. So where would you parking? In debt instrument.
Okay.
So let me say, like a core portfolio means for next 20 years, if necessary, we would be changing the mutual fund schemes which we have given in the core portfolio if the funds are not performing as per the benchmark. The satellite portfolio thing is, if market has been too much over expensive, then we would ask you to shift all the money, not this, some extra lump sum money in the debt instrument. Over a period of time when market cools down, right, the debt instrument part would be again reallocated for equity schemes.
Okay.
So that's how at the portfolio level you could get maximum returns by just doing five schemes. Even if you ask ChatGPT to give five schemes, it would give the five schemes. But it if you're doing with an MFT partner like us, this is the one advantage what you would be getting. At the portfolio level, you would be getting more alpha because we would be using the strategy of a core and satellite portfolio, and we would be doing rebalancing thing over a period of time. Let me give you a just brief about how rebalancing things works. Let me take the school example itself because it connects us a very much law. In school, in classes, I think we all had the timetable. So from Monday to Saturday, but every day there won't be the same subjects. So Monday while going, we would have arranged the book as per Monday timetables. But over the period of time, Saturday, all the books would be in our bag. So Sunday, what we would be doing?
You would rearrange it for Monday.
Same thing would happen in rebalancing thing also.
Okay.
So over a period of time, what would have been happening means before we start to do investments thing, right? Based on your plan, we would have decided for you 60% equity and 40% debt. But over a period of time in your portfolio, there would be 50% debt and 50% equity. So at that time, we should reduce that 50% of debt to equity. This terminology, we call it as rebalancing.
Okay, it's like rearrangement of funds to reduce the debt
Exactly.
value. Okay.
Exactly. I think now you are getting very much interesting. So this is how the things work. This is the strategy what we would be using and giving to our clients. Based on this strategy, taking your risk profile into consideration and your your career. Like today you might be starting with 50,000 of your salary, but next 10 years your salary base won't be 50,000. So keeping all these things, we would be planning a financial roadmap for you. So before going to that, like if you have any questions about any mutual fund concept, like would you like to ask? You please ask.
I want to know the difference between SIP and lump sum. Is SIP good or lump sum?
See, SIP is a part like it's like you would be investing every month some certain amount of money. Lump sum means at a time you would be investing. Like say, since we are not born with gold and spoons, for us SIP is preferable, but everybody would not be like us itself. There would be NRI clients, HNI clients. They won't care about mutual fund SIP, and they would say, I have 1 year today, get me this much of returns, some X% of returns. So for them, what they would be doing is the money what they are giving, the corpus what they are giving, investing at one time, 1 year. That's called lump sum investments. So technically, which is better means, if I want to say, if you do SIP, you would be getting rupee cost averaging.
Okay.
So if you do lump sum, you would be getting time benefit. So technically, both are important. Again, what I would be saying is which is important, which is good more than that. Like we should think in a perspective like how to combine both. Everything is good. Everything has its own advantages and disadvantages. When we combine the both elements, we would be getting some greater results. So that's how our perspective should be in investing, and that's how we should be thinking and adopting. And we should, at the core subconscious mind, we should think in this perspective, not like which is good or which is bad and which suits us. Like how should I combine all and get optimal returns?
Okay.
So any concepts you want to get to know from me before?
As you told, there are three concepts. You explain me one concept, and I really want to know the other two concepts as well.
Like in that itself, I had explained about rebalancing thing. That's one concept, and the second one is core and what we say, satellite
Okay.
portfolio. Third concept is what you had asked about SIP and lump sum. So how I would be integrating the lump sum strategy with the while building your portfolio and to get optimal returns is, let's say you are doing SIP every month 15,000 or 5,000 for argument's sake. When market fell, your NAV would drop. At that point of time, I would ask from IFD or liquid fund, what you have kept, start liquidating there and buy equity related schemes. So you are getting what we say, more units at less price.
And I also learned about SWP. What is SWP and how it is different from SIP, or it is included with SIP?
So SWP means once your corpus reaches some certain amount, let's say 1 CR, 2 CR. So if you withdraw your money, entire corpus, then there is no point of your efforts of doing 20 years of SIP would get wasted. So what we would be saying is, whatever the money what you needed for buying a home, purchase through a loan and plan your loan amount through SWP. What SWP means, first you would be doing SIP thing. It's a step. SIP every month 10,000. You would be reaching 1 CR corpus. Now you need every month 75,000 rupees for leading your life or to pay your EMI expenses, anything. From that 1 CR portfolio what you have, you would be withdrawing the money every month. That's called SWP, and that subjected to taxation.
Okay.
On that year of what's the regulation, what's the laws would say on the year of withdrawal, that would be subjected to taxation.
Okay. And recently I heard this term called mutual fund loan, which I was not aware. How it is different from people taking personal loan or other loans?
There is no much different. Here in mutual fund loan, you would be giving collateral, your mutual fund. Like if you go to bank and ask for gold loan, they will be processing loan only if you give collateral as a gold which you are holding based on current value of gold. In mutual funds, how it works means, let's assume your portfolio value is 1 CR. You would approach some bank and you would ask them to give the loan. Let's forget about the interest rate for now. The banker says, give me your mutual funds holdings, pledge it with me. I would take 30% haircut, which means he won't be giving you loan for 1 CR. He would just process loan for 70 lakhs.
Okay.
So you are getting loan amount here, and you are having your mutual fund portfolio would be growing. So that strategy, why I don't call it a strategy, that system why they have built is, so you are not disturbing your investment, and by the liquidity what you need, you are getting by pledging your mutual funds. So your corpus would also go. Once you get some money from elsewhere, you would be repaying the mutual fund amount, loan amount also.
Okay.
This is how the mutual loan against mutual funds works.
So I suppose I want to start my journey with 10,000 or 15,000.
Okay.
How should I invest? Should I start my journey with SIP or lump sum?
Start with SIP. Like if you have 10 lakh rupees, then you should definitely go with lump sum. But the problem is you don't have 10 lakh rupees. Just now you have started your career. So you should start with SIP.
How shall I see my long-term growth with SIP?
Yeah, for that I would take the calculation and just say with the numbers. So just to make sure what I have understood is, she is very ambitious and very curious about her future and wants her retirement very early at the age of 55, if I'm not wrong. So she wants to start SIP with 10,000 rupees a month. So I would just give a roadmap what would be the end figure and what would be in next 10 years and what should be your approach. Very simple thing.
Yeah.
So if you start SIP of 10K today, over the next period of time, over the next 10 years, when you reach 34 years, you would be having a corpus of 26 lakh rupees.
Okay.
Assuming the XIR returns of 15%. Industry standard is 12%, but because the strategy which I had discussed with you, keeping those things in mind and with our experience and expertise, we can aim for 15% XIR or CAGR returns. So over a period of next 10 years from today, you would be having a corpus of 26 lakh rupees. It might seem like still you might look, this number should look you for what I have just got 26 lakh rupees. Just wait, let's go, let's travel for future time's sake. Next 10 years, from 34 years for next 10 years, when you reach 44 years, you would be having a whopping corpus of 1.5 CR.
Okay.
Yeah.
Is it a real number or it would be less or more?
Like approximately here and there the number figures would go, but close to you would be having 1.5 CR corpus. At beginning I had said your retirement you were planning at 55. Technically now you could retire at 44 years itself. Now I would say how you have 1.5 CR corpus, and let's assume you would be withdrawing 6% of your corpus every year. It comes to 9 lakh rupees every year. If I divide it by 12 for every month, you would be getting 75,000 rupees. From 44 years, when you reach 44 years, you would be getting around say 75,000 rupees in your bank account.
Okay.
And the fun fact is, next 10 years from 44,000, assuming you are stopping your SIP at for 44 years, still next 10 years, the remaining corpus what you had left is left, right? So can you say what would be that value? You're withdrawing the money and still your corpus is growing for next 10 years.
Approximate of 1 CR?
No, it would be 3.9 CR, close to 4 CR rupees.
Okay.
So from 44 years, when you reach 44 years, right, you had 1.5 CR of corpus. You are withdrawing the money. You are stop the SIP. First thing, you are withdrawing the money every month. Every month you are withdrawing 75,000 rupees. Even though you are withdrawing for next 10 years from 44 years to 55 years, your corpus would also grow for 3.9 CR. And every month still you are withdrawing 75,000 rupees as your SWP. So this is the financial roadmap what I wanted to share with you. Now the challenging thing is, in theoretically this would look wow, awesome thing. But the challenging thing is to reach here. First thing, what's important is discipline from your end. I can't give you the discipline and patience. It should be coming from your end. What I can do is select the good schemes for you whenever required. Rebalance the portfolio. Suggest funds, new funds whenever market falls, and change the dynamic allocations about your satellite portfolio. By doing all these things, it's a journey. In next 40, 45 years or 55 years, you could achieve this number.
Okay.
Yeah.
I also have a doubt. I'm seeing recently the videos related to gold fund, silver fund.
Yeah.
How it is different from a physical gold or silver? And
Okay. See, the gold fund means, for example, I won't take any AMC, some reputed AMC which is top among the India. So they would collect money from you. And what they would be doing is they would purchase the physical gold from the vendors, or like RBI given guidelines. Based on RBI given guidelines, they would be purchasing the gold or silver from trusted vendors. They would be keeping in the custodian of the AMC. Once gold prices rises, your investment values also rise. So that fund, what you are saying is, they would be creating the same within the same fund house, they would be having their own ETFs. This fund would be purchasing their own ETFs. As usual, how gold price rises, your ETF value would also rise. Indirectly, your NAV would also increase.
Okay.
So technically, even they instead of you purchasing, you are giving some money for your gold, your mutual fund AMC manager to purchase it. Because for 10,000 you can't purchase. You can purchase, but the ROI would be very less.
What are the basic steps or basic discipline we need to follow when we enter into mutual fund investment?
First thing is consistency, and second thing is not seeing your portfolio daily. If you follow this and trusting your MFD, if you follow these three things and live, it's very cakewalk for you. Your journey would be very cakewalk. And from your end, you should be aiming to increase your disposable income every year. So that's the only requirement. Remaining things, you leave it to us. We would take care.
Okay, thank you
Yeah.
for this suggestion. Srisha, thank you so much for guiding me the journey, and that really inspired me to start my investment process now. And thank you so much for giving your time and helping me through the overall roadmap and the process. And do you have any questions or doubts? Please drop down into the comments.
And it was very inspiring to see a lot of young Gen Z showing interest to start investments and building a good economy.